Welcome back to 7-Minute Options. Just checking in on the Moderna position we opened yesterday, and things went very well. Things went way better than the script. So I was expecting to hold this Moderna position for a week, maybe two, and then close it out, but it just closed overnight. I mean, it's rare, but this kind of thing happens. So just as a quick check of what we did yesterday is we opened up, there it is on June 7th, we opened up this call credit spread. So we sold the 260 call, bought the 270 call, and we collected $137 in premium. And the thinking behind it was yesterday, look, Moderna's been running up. It had 10 or 11 of these sessions where they just went up, 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 and up for 11 straight days, which is very rare for any stock or underlying. And at that time, I felt, okay, you know what? Why don't I sell like a deep out of the money call spread in the expectation that it will go down? And at the time, it was also helping my portfolio become more delta neutral, which is great. I picked up some negative SPY weighted deltas, so it worked for a number of reasons. And if you look at this chart here, this upper limit of the chart is at 240. I sold the 260. I mean, it's like way off the chart. And so even if it would have kept running up for a few more days, I was hopeful that between June 7th and the July expiration on July 16th, it would turn around. And it turned around today. So today is the first down day Moderna has had in over 2 weeks. So we got extremely lucky, right? Counting my lucky stars, that's fantastic. But even better than that is that it somehow it sucked all the extrinsic value out of it in one day. So to give you an idea here, as soon as I bought it, I set my 50% exit, right? I put my GTC order in for 50%. And there it is. This morning I woke up and at 6:52 a.m., that's my time on the West Coast, I woke up and there was my message on my cell phone saying that, yep, Moderna got 2 fills. I'm like, you're kidding me, in less than a day. Yep, so this call credit spread lost half of its value in one day. So today I closed it out for 67. And so there we go. We sold it for 137. We bought it back for 67, and there it is, total gain of 70. Now, you might be asking, if I sold this for 137, why didn't I go for exactly 50%, which would have been like 68, give or take? And the answer is I'd like to go a little bit more just so I can get my transaction cost covered, right? Because the opening costs, the opening trades cost me $1 each. That's $2. So I usually go 50% minus 2. In this case, I went 67, and so I made 70, but I paid $2, right? So I really made $68 if I remove the $2 of transaction costs that this cost me. But yeah, it happened in one day. Incredibly hard to believe, but that's how it went. Taking a look at the actual position here, that was the 260. If I look at the same option chain now, the 260 is this one here is the 15 delta, and it was the 270. Interestingly enough, now it's gone down to 36, which means I could have made even more, but I'm not going to complain. I mean, I'm very happy. Every time I can make 30, 40, 50% of a credit spread in one day, I'm closing it out. At that point, most of the extrinsic value has come out. Take the risk off, take the money, be happy with it. And so I'm very happy with how this went. Interestingly enough, it's still a 15 delta. So I think when we opened it yesterday, it was like a 22 or 23 delta. That was the closest to the 20 delta area that I like to be in. And today it's still a 15 delta. It's just the big down move took a lot of the implied volatility out. And actually, interestingly enough, the implied volatility is still showing us quite high, but hey, I'll take it. This was a great trade. I'm very fortunate in how it played out. All right, let's hope there's more of these coming down the pipeline. Thanks.